Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. He tells us what stocks are leading the market trend higher, that gold is going sideways, crude is having a nice rally, and not much happened with the U.S. and Canadian dollars. President of InsideTrackTrading.com, Eric Hadik, examines the cycles that could predict where gold, the U.S. dollar, crude, the Nasdaq, and Bitcoin are going. He also takes a look at interest rates and lithium. Publisher of the Leibovit VR newsletters, Mark Leibovit, looks at whether inflation is under control, the effects of solar cycles on the markets, and why President Trump is so infatuated with Greenland, the Panama Canal, and Canada. We'll talk to Ross Clark right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on X at ChartsBy. Ross, welcome back to This Week in Money.
Good to be back, Jim.
How would you describe what happened on the stock markets this week?
Well, we got a week with, testing of support right at the beginning of the week. The S&P, the Nasdaq, right into their 20-week moving averages. And, these uptrends just remain in motion. They have tested decent support levels, the type of thing you like to see in an uptrend. So the numbers where we were, first part of December was the top for most of the indices. Month of correction, oversold 4 or 5 days ago here as we hit the moving average supports. And we got some of our good oversold signals right in the bottom days on the Nasdaq. And with that, now we've retraced a good 2/3 of the decline from the December high, pretty much across the board in these indices. Very important supports as of the lows that we've just put in. If we're going to have a rolling top, that will be the spot at which you can say that the top is in place. However, we just watch those as the critical levels in these rising trends right now. So, keep an eye on that. There are some stocks that are leading the way on the upside. The financials, the U.S. banks, good earnings. They're popping through to new highs, or at least testing the highs. So, when the financials are good, the market tends to hold its ground pretty darn well.
What's the story with gold so far this year?
Gold has gone into just a dormant range, really. We've been top and bottom of the trading cycle, a range for the last, since the middle of November now. We've been stuck in this, we'll call it maybe $150 trading range. We're at towards the bottom end of it, right around the end of the year. A decent rally this week took us up to just over 2,700, 27.25 for the top. That looks like it might be an interim high in here. Support down around 2620 is what we want to be watching pretty darn carefully. The seasonal aspect here, it's going to run out of its normal upside market momentum. Typically that happens December, January into February. So at this point, we're a good halfway or more through that part of the cycle. And if anything, when I take a look at the miners, the GDX, the GDXJ ETFs, they gave some overbought signals as of the last 2 days. And these are at, so this will now be third level of a top. And the most two tops here in the last month have been at progressively lower highs. As you say, right at the end of October, you had an important high. then again middle of November, and it looks as though we might have just put another one in right now. So easiest path right now is at least for the bullion, a test of that 2,600, and we'll see how it holds. Silver has been likewise having the same type of price action, but with a lower bias to it. So if anything, you might be a little more cautious as far as the silver market is concerned.
What's happening with crude?
Crude, it's just been a pretty good rally here. We were at $67 not too long ago, and now we're up to 80 as of this week. It's been a great run as part of a normal seasonal play, and I think we've got some more time left on the upside. However, we're starting to see some excesses here. The XLE, which is the ETF of the stocks in the sector, gave us some capitulation readings down at 83 in December, and as of this week, that index is now up to 94. So it's been an 11-point run, really nice move for the stocks, and overbought signals right at the end of the week here. So, and we've got these up-testing multi-month highs. So pretty good chance, I think, for a minor correction in here before we have one more run to the upside. I think there's still, maybe another month or so left, easily on the crude oil market, but you want to have a pause along the way.
What's the story with the U.S. and Canadian dollars?
The currencies as a whole have been playing around their moving average resistances and support levels. As far as the dollar index is concerned, it came back to its 20-day moving average in the first part of the year, then had a pop to new highs for the move, up around 110 on the index, backed off this week, tested the moving average again, and ended up closing the week not too badly, up around 110. And if anything, this one is long and I think overdone in the uptrend. So looking for a potential turn there. The other currencies, the same type of things. On the reverse side, though, they rallied up, kissed against their 20-day averages, and most of them have eased off a little bit, although the Canadian is down here to 69.03 to close off the week. That is the lowest price that we've seen since back in August of 2003. So pretty rough stretch for the Canadian dollar. And, this is with good agriculture markets, corn, wheat doing pretty well in here, and the crude oils, we say, having an excellent move. So when you've got the commodity sector doing well and the currency not, this is pretty tough sledding. And for all that there's political ramifications around the corner, right now the market is in no rush to see any bids come in on the dollar. We did have some great oversold signals here in the previous couple of weeks, but been unable to see the dollar reverse enough to take out any resistance levels. So still going to be looking at the highs of the last 2 or 3 weeks here as the important catalyst point to say that there's been a reversal, but I wouldn't hold your breath for it.
Ross, thank you so much for the update.
Good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You'll find him on Twitter, or now known as X, at Charts by Ross. Coming up, Eric Hadik, next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Eric Hadik, CEO and president of InsideTrackTrading.com. He's speaking to us from Central California. Welcome back to This Week in Money, and Happy New Year.
Well, Happy New Year to you as well, Jim, and thanks for having me back.
Can you tell us a bit about Inside Track, spelled INSIIDE, and how our listeners can subscribe?
Yes, Inside Track is a research and advisory publication, or a set of publications that deal with technical and cyclical analysis in the markets, providing related outlooks, trading strategies, first and foremost on the futures markets, but also on many related markets.
Gold's been showing strength so far in 2025. Is gold looking bullish?
I guess that would depend on the time horizon that you're discussing. It has certainly maintained strength, as you said, but I think it has been in a corrective phase, consolidation phase since late October. At that time, gold fulfilled some multi-year cycle highs, as well as silver and the mining shares indexes, the XAU and HUI. They were all anticipating 3 to 6 month peaks in late October, and we are now coming about 3 months from there, 90 degrees, and gold has been really range bound for the last couple of months. In fact, if you take just a 5 trading day period from November 18th to the 22nd, a quick sharp rally in gold, it has only closed one day outside of that 5-day trading range from 2 months ago. So even though we have seen some steady upward motion for the first couple weeks of January, on a intermediate basis, gold is still kind of stuck in that trading range. And from my work, from my cycle work, I could still see another dip in gold in the second half of January, because I'm looking at the very end of the month for significant lows in gold, silver, and those mining share indexes. So it wouldn't surprise me to see some selling into those time frames.
The U.S. dollar is pulling back following a 110 high. Could the top be in for the U.S. dollar?
I do think that a secondary peak is very close at hand in the dollar index. If we haven't seen it already, when the dollar index bottomed in September, it perpetuated this 3.25 year cycle that I've talked about for the last probably 10, 15 years, but showing how a approximate 39 to 40 month cycle in the dollar index has been just uncanny in its recurrence. And all of that was telling me to look for a 3 to 6 month bottom in the dollar index in the September-October timeframe. We saw that take hold in late September, and as it gave some buy signals in October, I discussed why I thought it would rally into January before setting a multi-month peak. So we are certainly there now. It has initially fulfilled those cycles, but until the March dollar index futures give a daily close below 108, they are still in an uptrend, and there still is the threat or the risk of additional spike highs. So from a cyclic perspective, even from a wave and an upside target perspective, the dollar index has fulfilled almost all of what was expected from it on a 3 to 4 month basis, but it has not yet triggered a convincing reversal or sell signal.
If the U.S. dollar has put in a top, could this be bullish for a number of commodities?
In the long run, it could certainly be. I think there's a big difference, big distinction between a market putting in a top and a market entering a significant downtrend. And I think that's one of those theory versus reality quandaries that a lot of traders find themselves in. And in fact, one of the axioms that I have in my trading manual really addresses this, and I call it the axiom of market correlation. And the gist of it is when you've got two markets that are often correlated in either a standard uptrend or downtrend correlation, or an inverse 180-degree correlation like we're alluding to here in the dollar versus commodities, there are usually so many other factors that have a much stronger influence on the correlated market that the overall correlation you're talking about takes a back seat, except for the times of extreme market action. So taking that to an applicable example that we're talking about here, that the dollar topping probably wouldn't have much bullish impact on commodities, except for the fact that it could be removing one of the negative forces that has been holding some of those commodity prices down. If the dollar does go through a topping process, which usually that consumes some time, and then starts to enter a downtrend, that might have a little bit of a bullish impact on commodities, although their other fundamentals will probably have a much stronger influence. It wouldn't be until the dollar really enters some sort of accelerated decline or breaks some extreme support, in this case, maybe those late September or early October lows, that as long as we're between 110 and those previous lows, which were between 99 and 100 on the dollar index, it's not going to have a extreme influence on commodities. But if the dollar index worked lower and then eventually broke that support and was entering more of an accelerated phase of a downtrend, that's when all of a sudden you would see a lot of those correlated markets kind of stand up and take notice. So long answer to a short question, just a top in the dollar I don't think has any significant impact on correlated commodities, but if and when the dollar starts to signal a more significant downtrend, then it could start to have that supporting effect on those commodities.
The Dow and the S&P 500 are experiencing volatility. What are the cycles seeing for the Dow and the S&P 500?
There again, it hinges a lot on the time frame that's being discussed. From a very broad, long-term cycle standpoint, all through last year, I discussed the 17-year cycle of stock market peaks that has been pretty consistent in timing, broader tops in the stock market. The most recent one of that cycle being the peak in 2007. Prior to that, you saw a peak in 1990, in 1973, in 1956. Each time it triggered at least a 20% decline, and many of those times a much more significant decline. So from that broad perspective, I was looking for a multi-month, probably longer than that, top to take hold in the fourth quarter of 2024, linked to the fourth quarter of 2007. And we appear to have seen that taken hold, but on a more near-term, more practical, from a trading perspective basis, there have been some weekly and daily cycles that the stock indexes have really adhered to pretty closely. One of the most significant, I had put together several reports in early October, mid-October, discussing why I saw the S&P mid-cap as being poised to lead an October-November surge in stocks and probably peak in very late November, November 22nd or the 25th, 2 trading days, a Friday and a Monday, were the focus of that analysis. And that was also applicable in the Russell 2000, the Dow Transports, and all of those indexes fulfilled that even more precise than I expected, surging through October and November and topping exactly on November 25th. Some of the other indexes, the Dow Industrials, Nasdaq 100, S&P 500, at the time were showing that they still had a little bit left in them and would probably spike higher into early December. But since that time, they have been in what I thought was a topping phase on a multi-month basis. The first decline, I described why they should see a drop into December 19th or 20th, then a bounce into January 6th. And since January 6th, we have started to enter another down cycle on a multi-week basis in stock indexes. But the real more significant negative portion of that cycle could be seen later this month and then into the middle part of February. I've described several different cycle convergences that come into play out in the coming months, and detailed some of that in my Inside Track newsletter and weekly relay update service. And the cycles that I described there, it's just a very intriguing alignment of so many different cycles. It's that synergy that really causes me to take notice and treat them with a higher confidence and credibility level. So I think that we're going through this topping phase in a lot of the stock indexes, but in line with what I call my 90-10 rule of cycles, which is just a little bit of a extreme of the normal 80-20 rule that you're used to hearing about. But often a lot of these markets, metals are notorious for doing it. Stock indexes will often see something where they see the majority of their move up or down towards the end of that cycle. So it's often very important to me to be focused on those cycles, but not in the way that I think a lot of traders approach it. And by that I mean, when I'm looking at a future cycle low, I'm very focused on the weeks leading into that as being the time with the highest probability for significant sell-offs and accelerated sell-offs. And that's when I want to be trying to capitalize on related moves in the market, as opposed to this idea of always trying to pick a bottom or pick a top and start to enter a market, because there's a lot that goes on surrounding a market top or bottom, and a lot of back and forth that often ends up frustrating or faking out traders. And for me, a market bottom is a great place to be getting out of short positions, just as a market top is a great one to be getting out of long positions, but waiting for that process to then unfold and some signals to be generated that would get me to enter either long positions following a market bottom or short positions following a market top. So I'm all that to say is I think that equities are going through a topping process, but there are some specific times and some specific signals that I'm focused on to give what I think will be the best opportunities to capitalize on that.
The Nasdaq hit new all-time highs in December. Could the Nasdaq have seen a cycle top?
Well, similar to all the other indexes that I was discussing, yes, I think that the Nasdaq could have seen at least a multi-month cycle top, and it gave some initial sell signals, some initial sell-offs. I am looking for a lower high here on either January 16th or 17th. We just sold off into some downside targets on a 2 to 4 week basis, and some daily cycle lows on January 13th, and have started to bounce. But I think we could see the resulting top of that rebound either today or tomorrow, the 16th or 17th, and the Nasdaq could be poised to enter a new sell-off if it fulfills that like I expect.
Crude oil has been moving higher since late December. Do the cycles continue to look bullish for crude?
I do think that the energy complex as a whole is still in an upcycle. I described and we discussed back in the second half of last year how a lot of multi-month and multi-quarter cycles were anticipating a bottom in September of last year, not only in the energy markets, but in related commodity indexes like the Goldman Sachs Commodity Index. Many of those indexes are weighted pretty heavily in energy, so they tend to move in lockstep with each other. So when what are somewhat unrelated cycles were indicating the same thing in both of those for a September bottom that should be at least a 3 to 6 month bottom, that was really corroborating a lot of the technical indicators that were also telling me to look for a bottom at that time. And then coming into the beginning of January, all of my work on a 2 to 4 week basis was saying to look for a surge in not only crude in the products, but also natural gas. Natural gas has some cycles towards the end of the month when we could see an intermediate top, but crude and the product really looked to me like they could have turned the corner back in September. They have reached some extremes right now on an intermediate basis, with crude oil right around the $79 level having a very significant upside target that had been reached. And I've started to discuss when I think some subsequent lows will be seen as part of the pullback from this potential peak that we could be seeing taking hold in the middle part of January. But I do think that from a little bit broader perspective that the crude and the energy markets are in a 3 to 6 month bullish cycle.
Bitcoin dropped below $90,000 US, then recovered. How is your Bitcoin cycle looking?
Bitcoin continues to be influenced by a few different monthly and weekly cycles that I wrote about back in third quarter of last year, where a pretty consistent 10-month cycle was looking for a bottom in July and August of last year. And then in early October, when Bitcoin and several of the cryptos signaled secondary lows, they gave some pretty bullish buy signals that were the focus of some reports I did in October that projected an October-November surge in cryptos. I think that they have peaked on a multi-month basis and are turning the corner to the downside. In fact, I've already published some downside targets that I think are going to be critical for Ether and Bitcoin, as well as some future cycle lows. But they're still going through a topping process. I think that Bitcoin can rebound back to 102, 103,000 on a near-term basis. And it really does need to break below that 90,000 to confirm a much higher magnitude top.
What's the latest on the interest rate cycle and bonds?
That's actually one of the more interesting and could be one of the more influential cycles and correlated markets throughout the commodity markets and throughout the financial markets. All of my work was telling me to look for bonds to sink into the middle part of January, but that we could see a multi-month bottom set during this current week, January 13th to the 17th. That is when all of my cycles and timing indicators and wave objectives were aligning and telling me to look for a significant bottom in bonds, which is correlated to a top in interest rates since they trade inversely. So I do think that bonds are starting to show that. They gave some spike lows on the PPI and CPI data this week, which was also kind of my expectation that you'd probably see the turning point correspond to those releases. And we've seen an initial rally in bonds, but I really need to see some confirming closes on the weekly close, the January 17th weekly close, to really indicate that a bottom is taking hold in bonds. I have described why I think that the next important peak in bonds and related low in interest rates won't be seen for several more months out into the middle of the year. There's some specific times that I've described in my analysis that could time the start of the next upswing in interest rates, but in between now and then, obviously, we would see a decline in rates and a rally in bonds. But I think that those cycles looking out towards the middle of this year could be very significant for the next 1 to 2 year outlook. So I'm continuing to elaborate on that, particularly in my Inside Track monthly newsletter.
Lithium looks to be moving a bit higher. Is the lithium chart starting to look bullish?
Lithium is certainly showing some signs of bottoming. I don't see anything on a technical basis yet that I would call bullish, but that doesn't mean that can't emerge pretty quickly, a signal like that. Right now, it's just kind of playing along at its multi-month, multi-year lows, but it would have to break above some certain key levels to start to turn bullish as a little bit of a proxy or warning signal, warning being for a reversal to an uptrend or downtrend, in this case for a reversal to an uptrend. I will continue to watch a lot of the related lithium stocks, and some of them are showing signs of secondary lows, which that's the type of divergence you want to see at a bottom, where the actual price of lithium is setting new lows, but many of those stocks are setting higher lows, secondary lows, after an initial rally and pullback. So there is some reason, some correlations that are certainly prompting me to take notice and give a little more attention to that market sector, but I haven't seen any really bullish signals in lithium yet.
Where can listeners subscribe to Inside Track, spelled with 2 I's?
They can go to our primary website at InsideTrackTrading.com, and as you noted, that is inside with 2 I's in the middle, so it's INSIIDE, TrackTrading.com, and there they can find a wealth of archived reports and publications that allow them to get a very good feel for what we provide, and then also a detailed description of each of our publications and the different subscription terms that we offer.
Eric, thank you so much for being on This Week in Money.
Thank you for having me back, Jim.
My guest has been Eric Hadik, CEO and president of InsideTrackTrading.com. He was speaking to us from Central California. Coming up, Mark Leibovit, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Welcome back to This Week in Money, and Happy New Year.
Yes, thank you for inviting me back, and Happy New Year to you. And we're now looking forward to the vernal equinox coming up in March, since we had the solar solstice in December, and that's the big next cycle event following the new year. Of course, we've got Groundhog Day on February 2nd we can look forward to, and everybody else is looking, I suppose, to the presidential inauguration on Monday. It is a day off by coincidence. As you know, Jim, it overlaps Martin Luther King Day, which was a national holiday here in the U.S. So long weekend for stock traders.
To start off the new year, do you have a special offer for our listeners?
We'll do the same offer for any new subscribers. 2022 half off is the promo code. You go to vrtrader.com, VictorRobertTrader.com, and when you order one of the newsletters for any time frame, and a group of letters, just enter the 2022 half off promo code, and you get 50% off on any of our newsletters. And before I forget, yes, I'm not a financial advisor, nor do I provide financial advice, though I have published my technical analysis and market and economic and political and apparently geocosmic commentary now for nearly 45 years.
Mark, can you tell us a bit about the VR newsletters?
Well, it all started as a floor trader back on the CBOE back in the 1980s, and watching technical analysis and having a great mentor way back then who taught me the basics of technical analysis, and started getting into looking at charts. And I was influenced by cycles early on, even when I was a floor trader. I think I've told the story before. When I was trading on the CBOE, I ran into a trader who was a financial astrologer. And it turned out some of these guys became pretty popular. I think the most popular name out there, an old friend of mine, Arch Crawford, who lives here in Tucson, Arizona now, used to be based in New York and was a regular guest on CNBC. But I ran into a whole group of those guys who were talking about cycles, and they had an organization, the Astro Cyclical Exchange in Chicago back in the 1970s and 80s, and everybody attended, whether you were just a normal trader or cyclical analysis or technical, because you learned all about timing in the market and all kinds of interesting stuff. So I got influenced into the cycle work, based on my floor experience watching guys that look at the moon and the stars and start telling me about other things like 40-year cycles or 20-year cycles and solar cycles and moon cycles and earth cycles and moon cycles. And we start learning and figuring out there's a lot more to the market than just earnings and economic forecasts that seems to pervade the financial media almost exclusively. So in terms of big picture stuff, things that you really need to know about are not really discussed, but all the traders seem to know about this stuff. In fact, commodity traders are very interested in lunar cycles and all this type of stuff because it affected crops and all kinds of things, and they just wanted to incorporate that in their trading or investment strategy. So I come from a very diverse background of technical cyclical training by watching other traders and learning other techniques that are out there, and I incorporate all that as best I can into the VR Trader newsletter format. So we talk about a lot of stuff because it works, and when you have a cycle come in and a time frame, you want to take advantage of that if the market's overbought or oversold and so forth, and that's looking at the overall market. But still, we look at individual stocks and things that are happening and see if the charts confirm what we're seeing. And usually I get pretty excited, Jim, when they really take a stock or a commodity way down. That tells me that the smart buyers out there are accumulating, because that's the way the market works. They knock it down to accumulate stocks or commodities, and they run it up to unload it. This is what I learned on the floor when I was trading, and I guess the nice term for that is market manipulation, but it's been going on for, probably centuries, but decades for sure. So all kinds of cool stuff that, subtle things that you learn as a trader when you're out there about the way the market works. And one of the key things you have to try to ignore is, the conventional wisdom that you hear in the media, because that's generally exuberant on the wrong time, at the wrong time, either too bullish at tops or too bearish at bottom. So long-winded response here. VR Trader incorporates my volume, my technical analysis and cyclical analysis, and a little gut feeling too, having done this for so many years.
Tuesday's full moon, the winter solstice, and the upcoming vernal equinox in March. Could these events affect markets? And if they do, which markets are they most likely to affect?
Generally, they affect all markets. They're change of direction times, and I look at the lunar cycles, and I've talked about this before, but I'll say it again. The story behind this goes way back to the 1970s. This is before I even got into the stock market actively. I was just starting to learn about it back then. And my old, friend or contact, Louis Rukeyser, who was kind enough to invite me on his show a number of times and offer me the designation of being a elf on his PBS television program way back there in the 80s and 90s. He interviewed a fellow by the name of Ian McEvedy, who was based, I believe, in Toronto, and he had a newsletter called Deliberations, and he was, a technical analysis of the markets. So he came on the TV show, I think it was 1972, if I'm not mistaken, and he starts saying, well, I have an analysis that says gold and the full moon overlap each other. In other words, you're going to get highs around the full moons, and you got to watch gold in that time frame, and that might be a trading indicator. So being new to the market, I found that extremely fascinating, and they didn't invite Ian back on the show again, though I did get to know him in later years at various conferences. But that influenced me a lot, because then I started saying, well, what's this about the moon and the markets? Or what's this about any of these, planetary or cyclical forces out there? So I started charting it on top of everything else that I was doing. And in my newsletter, I put the lunar cycles in, because on many occasions you'll see the markets not necessarily peak or trough on a cycle, but change direction around these cycle points. So he affected me, and I start charting this, and I've been doing this for decades. I chart the lunar cycles and these solar cycles and the seasonal cycles as part of my forecast in terms of a general feeling of what markets may or may not do, and we find this extremely interesting in terms of some correlations in terms of market timing and sentiment. So he influenced me. And, you can't say any cycle point tells you for sure it's going to be a high or low. It could be a change point. That's what we really learned over the years. So you look at these dates, these key dates, several that you would just mention, and you have to see where the market is running into those time points, and that gives you a sense whether the market will change in the opposite direction or not. So a lot of fun, been doing it for a long time. And when I'm long gone, these cycles will still be here, and they'll still affect economics and activities on the planet. That's just the way Mother Nature is.
Volcanic activity is on the rise. What could this mean for the markets?
It's very serious stuff, we can sit here worrying about, a super volcano going off, which I'm told is actually other locations, the article that we put in our newsletter that are more serious than the one in Yellowstone National Park that everybody talks about. Apparently there's another one, I think it's off South America, I believe, is another location that's got some type of activity that could even be bigger than that. So yeah, the big issue is volcanic activity has been with the Earth forever, and there's been extreme explosions. As you know, you're pretty well versed on that yourself in terms of history and what happens to the Earth when one of these things go off. The cloud cover and the reduces the growth of plants, and if it's a serious enough event, it could wipe out the human race if you get a super volcano go off, because it just clouds the atmosphere, blocks the sun, and could end civilization. So it's almost like a asteroid hitting the planet, or a polar shift, or shift of the continents, and that type of plate shift event. It's a serious event if and when it comes, but it could be millions of years or tens of thousands of years apart. But there has been an increase in solar activity, and in fact, once in a while we publish this in the newsletter. I think the Smithsonian comes out with a report every couple of weeks. And last I looked at, there's about 43 active volcanoes on the planet right now. And active, I mean, they're active. I mean, they're not super volcanoes. They're not exploding. It's not Krakatoa, it's not Mount St. Helens, but it's still active. I think the one down near Mexico City has been active for quite a while, along with the one in Hawaii, Kilauea. So, yeah, it's just a part and parcel of, when these things are going to get, activity is going to increase. Apparently we're in an increasing cycle here, and we just have to hope it's not a serious event, because no matter what we talk about, who the president of the United States is, or who's running China, or, what's going on in the Middle East or whatever, it's all irrelevant if suddenly one of these things blow off, because it changes everything. The whole human race is at risk for something they can't control. So it's interesting to follow it. Obviously, it happens. We can't do anything much about it, and it's sort of fun more than anything to track these things, like checking solar flares and where the nearest asteroids are relative to the planet, and whether we're doing anything to move and distract them away from the planet to save civilization from certain disaster. So you can sit here and worry about all this stuff. It's fun to track them, but ultimately it's in God's hands in terms of what will ultimately happen.
The fear-greed index is pointing to fear. Is this bullish for the markets?
It should be. It should be. It's a CNN, not my favorite network by any stretch, but they track a fear and greed index, and they publish it every day on the internet. I think it's around 26% now on a scale of 0 to 100, and it's on the left side of the scale, so it's sort of pointing to, a little fear in the market. So generally, this is like anything else. It's a timing tool. How long do we stay oversold or fearful before we rally, and how long do we stay overbought before we come down? So, and some analysts would also argue that you can use it as a contrary indicator. Too much fear, as you indicated, could be bullish, or maybe it indicates we're going to continue to go down for a while, and that becomes the prevailing force. Just as if we're overbought and the bullishness is really high, well, maybe there's enough momentum to keep things going for a while. So this is just another piece of the puzzle that you have to put into your charts and news, and mostly charts. You got to see where the markets are relative to where they've been, and are we really high or really low, and are we getting key signals to tell us it's time to buy or sell. So a lot of pieces go into this analysis in terms of how you want to interpret this stuff. So it's like, you're looking at 100 different things. Where do you put the fear and greed index into your analysis? And ultimately it comes down to reading a chart. Where are you on the chart? And this is where technical analysis, and this is where I got involved in my volume work, my volume reversal, looking at charts where volume shifts off key lows or key highs. And have we run up too much? Are we down too much that we're due for a change of direction? And then does that tie in with the fear-greed index in terms of where overall sentiment lies? So a lot of pieces come into play here. So I would say it's important, but it's just another factor. Another piece of the puzzle.
Do you think President Trump will abolish the Fed?
I sure hope he does, but it's not going to happen so fast. Of course, he's talking about getting rid of income tax altogether, which I guess says the same thing as your question. Basically, we don't really need the income tax, and the reason for that is because the government prints all the money anyway. And I've been saying this for the longest time. I'm saying they have a computer at the Treasury, and they hit a button, and suddenly $1 billion appears or disappears, or $1 trillion. So the collection of taxes is sort of irrelevant because the government just floods or reduces the money supply and prints money. And Ben Bernanke, the former Fed chairman back in 2008 or 9, he was on a CBS interview, and the question was asked, "Are you print money?" And he says, "Well, yes, we do." And it's been admitted for a long time. So you really don't need income tax because, where's that money go anyway? It goes into this computer and, they spit out more of it or they take away some, and you have the Fed doing the money supply, increasing or decreasing it. So it's sort of it's an acceptance that we have that suddenly, we pay taxes and the government uses that money and helps all of us, and so we know it's misappropriated and spent on ridiculous things anyway. But if they never got the money, they'd have the money anyway because they control all the money and it's all on computer. And particularly now, if and when we get into a digital currency and there's no cash floating around anymore, it becomes even more profound because then you have total control, no cash, and the printing will probably get even worse at that point. So it's really a conundrum into where this is all going. You know what I mean? It's in the old times, we didn't have paper money. It was barter for goods and services, or gold and silver, or copper, or whatever the medium of exchange was. And then it became paper, which has no inherent value at all to it. And it just becomes something that can be reproduced. And it's our so-called full faith in that the paper is worth something, but paper itself is worth nothing. So anyway, yep. Answer your question is, they believe that if they get rid of the IRS and the income tax, that would be better for the economy because people don't have to pay that tax and they'll have more money to spend. And it probably will help short term psychologically, I think. But in terms of the net result of having money supply around money, it'll still be there anyway because for some reason, the government will still be able to operate and pay bills and do stuff even if they're not collecting income tax. And when that starts happening, people go back and realize, and why were we paying income tax for all these decades when we really didn't need to do it anyway? And that realization would come ultimately when the taxes when the taxes stop. So interesting stuff. And not to mention the fraud involved. I mean, the IRS is corrupt. We've already seen them, go after people on politically not inclined to what the IRS or the current administration agrees is agreeable. And we saw this was her name is Lerner. She was an IRS agent who was attacking conservatives a few years ago, and she went before Congress, and was a corrupt IRS agent, out there. So, there's reasons to get rid of the agency. In fact, there's reason to get rid of a lot of government agencies that are inept or run by people who are politically motivated. So I think getting rid of the IRS as the first step would be a good step. But, I know our friend RFK, Robert Kennedy Jr., he wants to do an enema on the Food and Drug Administration. And we probably need the same thing done with the Securities and Exchange Commission. We know Gensler is resigning, so there'll be some change there. So a lot of the federal agencies, the Education Department, all these agencies need to be revamped. So the IRS is the first. I don't know if it's going to be the first or will be the first, but that's one of many that need a cleanup.
In 2012, President Obama legalized propaganda on the people. Could what President Trump refers to as fake news be going the way of the dodo bird?
Well, I hope so. We just saw Zuckerberg over at Meta, formerly known as Facebook, decide that he, who was a big supporter of Joseph Biden and the Democrats and contributed to the campaign and supported the idea of editing the news and censoring opinions that he was told should not be published on Facebook. Suddenly, he turned around here a few days ago and says, "Oh, now we're not going to, edit the news anymore. We're not going to censor news. It's going to be, free and open the way Elon Musk has done with Twitter." And it's now known as X, of course, not Twitter anymore. But it changes with the seasons. So, apparently there's going to be more of the X Twitter type environment on Facebook. And that's the way it should be. People should be able to express their opinion. And we found out in this current U.S. election that most people were getting their news and information or research, on the internet, and not so much from the legacy media who were politically biased against Trump and for the Democrats. And that's one of the reasons the Democrats lost, because the public as a whole, and myself, of course, included, had no faith in the legacy media, what you were hearing on ABC, NBC, CBS, and so forth, the PBS, which is, government funded public broadcasting here in the U.S. So there's big value in having the digital newsroom open to the masses and to have freedom of expression. So that's a current trend. Hopefully it stays that way. It should never have been censored to begin with. And the demise of the legacy media, CNN in particular and MSNBC, would be great if they go out of business or bought out and, moved in a more conservative direction and not so politically motivated. But sure, it could be misused. People could say a lot of things they shouldn't say, but that's freedom of speech. And that's what we need to have in this world.
Yeah, Zuckerberg said he would remove fact checkers.
Yeah.
Because he found out the fact checkers were biased.
Right.
Now, do you think this move by Zuckerberg is real and will last?
Again, it's the seasons. The season now, he obviously, with the political environment is such that he didn't have much choice. His buddies over in the Democratic Party and all the people that supported Biden were pressuring him, and they were in charge. And he's fearful that he'll lose his company, or some sanctions would be applied against him or his company if he didn't do what he was told to do, or the FBI would walk in there and arrest him because he didn't do what they said to do with regard to censoring certain news. So now that doesn't exist anymore. So how do we know 4 years from now it's not going to flip the other way again? And that's a very good question, Jim. It could reverse again. We hope that doesn't happen. And this is a sea change now that lasts for many years. Ever since Obama got in, it's been on the negative side. He's the one who really started all this nonsense, and he was the biggest negative, factor in terms of what's happening, at least here in the U.S. in the last, several years, in terms of the censoring of conservative viewpoint and the opening up of the liberal leftist propaganda, which has been the big problem here. So Obama, hopefully the age of Obama, which is the age of Biden, are gone, and we move into a new time frame and everything. But you have to be cautious because we have a lot of bad people out there trying to undermine this country. It was one of the most ridiculous events just the other day. They awarded, was it the Presidential Freedom Award? I forget the exact term for it, the Medal of Freedom, to George Soros' son. George Soros couldn't make it because he was too old or frail, obviously. I mean, Soros is one of the worst things that happened to the media and news and propaganda in this country probably ever experienced, in terms of his negative view, his intent to bring down the country, sponsoring leftist public officials, all kinds of stuff. And he just... it's the most ridiculous thing to see a presidential award of freedom to go to anyone related to Soros. Soros is, again, one of the worst enemies of the United States or the free world in terms of what he was trying to accomplish. And it's amazing because he's a Jew, and he was involved in the Nazis when he was very young, and apparently he was more sympathetic to the Nazis than most Jews would be. I believe the story goes back to when he was a teenager. And he's apparently anti-Semitic, even though he's Jewish himself. But apparently, he was out there to take down the freedoms that we all have for whatever reason he has. Though he was a good trader in terms of currencies and so forth, and made lots of money. His political bias was totally left and was destructive, I think, to Western civilization. And the fact that it was recognized by Biden just shows what an idiot Biden is, honestly. Well, anyway, we're getting off on a tangent here, but I shouldn't say Biden himself personally, because I don't think much of what he did was from his own thoughts. He was influenced by others who pretty much pressured him to do what he did, and it all started with Obama, I think, because Obama was his teacher. In any event, we got off on a tangent here, but that's where we're at.
Is the physical demand for gold and silver causing problems?
That's a good question. I don't know what kind of problems. The only problems would be if there's a shortage of gold and silver. I don't see that as much of an issue. I don't think there's any problem. I think it's been growing because of government's ineptness in terms of financial planning, and the world has sort of turned against the U.S. dollar because of the ridiculous expenditures and the debt that was created here. It creates the only problem I could see creating is the sooner demise of the U.S. dollar, because the dollar has been the bastion of strength for the world economy, and the faith in the dollar in the U.S. has been going downhill. So now with Trump in, maybe things will change a little bit, but the move toward gold and silver was a hedge toward the uncertainty of financial planning and the financial system. So I don't see it as a problem. I see anything with gold and silver as a good hedge, a good investment over the decades and over the centuries, and you have to decide whether you're a buyer and holder or whether you're a trader. But no problem that I can see other than it's a good place to put money.
What are you hearing on the California fires?
Well, the main story that's out now is the fact that the insurance companies are not going to be reimbursing these people. Many insurance companies have canceled policies apparently before the fire, knowing that there was a potential problem and they don't want to take the risks. I've seen a lot of this recently with insurance companies here in the U.S. where they just don't renew policies, choose not to sell policies. They're trying to obviously control their own profits and losses in their companies, and if they see too much risk with too many claims. So that's really the big story. The wipeout there is, we saw the big wipeout in was it Maui a few years ago when the big fire came in there, and I think apparently the U.S. government came in and paid $750 to everybody as compensation, and now they're saying the same thing could be sent to the people in California. That's ridiculous when we're sending billions to Ukraine and sending money overseas when our own people don't get the benefit of those funds or that bailout. So our government's messed up in that regard, but the insurance companies, they're businesses and they're trying to survive, and I guess they have the right to not insure you. Or the question is this going to change insurance laws now, where you can't run an insurance company in a state which is or state audited here in the U.S. unless you provide everybody with some form of insurance? And I don't know if that's going to end up happening or not, because right now insurance companies can back out and not cover people. So that's really what's big story in California. Besides the human and physical disaster over there, still going on. By the way, there's still fires burning as we're speaking. The fact that if you lost your home and you can't rebuild it, and there's no money to rebuild unless you have money elsewhere, and when we supposedly had insurance to cover us for these type of disasters, it doesn't exist. It really is. That's the biggest tragedy of what's come out of the fire. You always assume that the worst case, you have insurance for any type of negative event. And if you don't have it or can't get it, what's the result of this? Is the government going to have to get involved now? The government's going to have to provide insurance, as they do flood insurance, which is a federal program here in the U.S. They're going to have to do that for California or other locations. But at some point, the government can't bail everybody out. I mean, there are natural disasters. I mean, there are hurricanes, there are earthquakes, there are tornadoes. There's all types of disasters that occur everywhere all the time, flooding, and every possible event the government can't foresee or protect you against. So it's an act of God, and if you're going to lose your home, I guess that's an act of God too. You can't really necessarily protect yourself against every eventuality. So it's really a conundrum in terms of how this is all going to play out. I don't know. Right now, apparently these people are at a loss, and they're not going to get the money to rebuild unless they have the money already. And I don't know how this is going to play out politically. Rebuilding California could be very good for business in terms of the money that we need to spend to rebuild all the damages and stuff out there. But where's that money coming from? Is it ultimately the U.S. government's going to have to just run the printing presses a little bit more and chalk up the billions and billions of dollars it's going to take to do this? I guess if it's a printing press and it's electronic money, then it makes no difference. As we discussed earlier in this interview, they just start printing money and send money to California. And of course, that's going to be good for the building industry and for the construction industry and for materials and industry and lumber and all the kinds of ancillary companies related to that. So in a way, the fire could create a boom in terms of economic benefit once the printing presses start rolling in Washington and they start rebuilding California. So there might be a lot of money to be made out there for people looking to rebuild that situation, regardless of the insurance, because we don't know where that's going to play out. So unless the government steps in, Jim, and forces the insurance companies to cover all these people, which I don't think they can do at this point, that's about the only answer. Start spending a lot of money, run the printing presses, and bail out everybody in California.
President Trump seems to be focused on Canada, Greenland, and the Panama Canal. Why?
I think it's terrific. I just love the idea. Well, it's a geopolitical benefit to Greenland. Apparently, in fact, my wife's dad during this is after World War II. He actually served in the military on a base in Greenland, and I used to hear stories about this all the time. Though I didn't speak to him directly about it, that he served and had been in Greenland, but apparently it's a strategic location for the military, and this is nothing new. In other words, it came up in this last few weeks, but apparently it's been in discussion, and there's been a lot of talk about getting more involved in Greenland in terms of fear that China or Russia might do it if we don't do it, in terms of protecting I guess the integrity of the United States or the Northern Hemisphere by making sure that China and Russia are not there first. So apparently there's a lot of sympathy by Greenlanders for a closer relationship to the U.S. I think it's a terrific idea. I think this could be a real legacy for Donald Trump if he pulls this off and actually incorporates Greenland as part of U.S. territory like Puerto Rico or the Virgin Islands or other places. And could be a big economic benefit because there's tremendous amount of minerals and natural resources there, and they're not being exploited. And for the U.S. involvement, and particularly if it becomes part of the U.S. or closely associated with the U.S., that will stimulate a lot of business activity there, which would be good for Greenland and good for companies that would be working in that area. So it's a terrific idea, but like I say, it's not a new one. It's been talked about in the past. Denmark, which controls Greenland, from what I understand, really doesn't have the ability to do any of this, and certainly not defend it militarily. So they had an interview on TV the other night, former ambassador to Denmark, talking about that it might happen. You might see annexation or some type of closer relationship to the U.S. Coming forward. So this could be a real legacy for Trump if he pulls it off. As far as the Panama Canal, that's a really easy call. I mean, that was an idiotic move on the part of Jimmy Carter, who I mostly remember him as the man who saw the UFO back in 1969 and was given a lot of press for that. Not talked much about that at all. They talked about the fact that he then saved the Shah of Iran and let Iran fall, which has been the big problem we've had for decades since he pulled that misnomer off. And as far as his political bent and philosophy and so forth, but the other big story, of course, was giving away the Panama Canal for $1. I think is the story when the U.S. had funded the whole thing. So the idea of the U.S. taking it back, frankly, makes a lot of sense. Apparently, from what I read or hear, the Chinese are real involved with the canal, and it becomes a strategic military connection for the United States. So I think he's right on there in terms of gaining more control of it and maybe taking it back, because after all, the U.S. had funded the whole thing, and giving it away for $1 didn't make a lot of sense. I don't think at the time or now at all. So how he goes about doing that, we'll find out. But the U.S. carries a lot of weight, and if we want the Panama Canal back, we'll end up getting it.
The deep state swamp is big. Do you think President Trump will be able to drain it in the next 4 years?
Well, this is our hope, but, we have a lot of bad apples there, and you can't fire everybody. I've said for, longest time, I mean, this is no great insight on my part, but the problem is the secret government or the government employees that are there forever. I think you and I have talked about this off air. Someone comes in politically, but the employees, the lifetime employees that work at the various government agencies sort of talk politicians out of doing things that they would like to do, and they pressure them to their own point of view. And being elected to a congressional position really doesn't mean anything because you're only there for a short period of time, but you've got career employees in the various government agencies that are there forever and dictate everything that happens. So, for the longest time, I was saying you got to fire everybody. You got to start from scratch. I mean, if you got all these people that are not doing the right thing or are politically biased, get rid of them. Fire everybody at the major agencies and rehire and screen new people. And this is why you have people like this Lois Lerner at the IRS we talked about earlier that are politically motivated and do things that are not objective, and they're strictly based on their political persuasion and their attempt to influence people by threatening them with investigations and so forth or penalties of some sort. So if you could get rid of them and clean out the agencies, and I think Robert F. Kennedy wants to do this with the Food and Drug Administration and other things related to the food and health situation here in the U.S. I mean, we need every agency. We need an enema. You need to go in there and clean out the people that are either politically motivated or maybe been there too long, and start from scratch. And that's really the problem with Washington. People that work there, not blaming the congressmen and the senators, who obviously have some impact, but are again not the real cause of the problem. So a lot of the negative things, unfortunately, that happen politically is because of the employees there that we have to get rid of. So how you go about going to do that, I can't specify that in this interview. I mean, I'm not an expert in this at all, except as a general observer, but that's the first step, and hopefully he's successful. It'll be a very tough job to do it. He's got to probably be there more than 4 years to do it. Hopefully, if in the next election we elect here in the U.S. another Republican that could maintain the same philosophy. A lot depends on the midterm elections coming up in 2 years that the Republicans here in the U.S. can keep control and keep moving forward with their program. It's a real cleanup problem. It really is. Too much of the left got involved here in the U.S. with the woke theories and DEI, and it's just over the top. Women having to contend with men in sports, competing against each other, sharing bathrooms because of this leftist mentality. I'm telling you, Michael Savage wrote the great book. It's been about 10 years ago or more now. Liberalism is a mental disorder. And I keep quoting that in my newsletter all the time. It's like, I hate to say this, and I had relatives in my own family. I mean, it's just mentally ill. They don't look at the facts. They do stupid things, and they say stupid things. And all the policies that we've seen have been bad, and they're, I think, related to. That's my dog. He agreed with me, so he barked. Anyway, yeah, it's mental illness, and Michael Savage correctly identified that. In fact, he's on Newsmax all the time. I love still watching him. He doesn't do his radio show as much as he used to, but yeah, that's how I feel. I think that's the problem, and hopefully we can change that.
Before President Trump takes office, there is UAP UFO disclosure rumored to be happening. What is UAP UFO, and what are you hearing?
Well, the big story is there's supposed to be a disclosure coming up, and so far I haven't seen it happen. There was an interview on Newsmax just it was about 2 weeks ago, and there's an analyst in the industry, or I guess in the UFO UAP, if you want to call that industry. His name is Dr. Stephen Greer, and he's been around for a long time. I've been tracking him for a few decades, and he's sort of the he's the believer, as I am, that there's a secret space program. There are things going on that are, I guess, best described as super science, and a lot of it may have been gleaned from alien ships that crashed, and we retrofitted and we re-engineered technology that apparently crashed on the planet. And he's been on television recently, and of course I've been following him, as I said, for quite some time. But and this gets into a whole other subject. So if you're listening to this podcast. You're going to believe it or not, but I've been aware of this for decades, and you got to listen to Stephen Greer. You can put him up on the Google, and you can see many of his interviews. But apparently, we have technology that's so advanced. Our crafts that spaceships and other type of crafts that exist are so super advanced compared to what you know about or think that you know about, that it just blow your mind. So apparently we have a whole group out there. It's been funded secretly ever since Roswell crashed in 1947, and the secrecy surrounding it actually created a whole separate group of government which is not connected to the main government and runs independently. And I think Harry Truman was the kickoff of this after the Roswell incident, where we created a group called the Majestic 12, which was, and you can research this and Google this, but apparently a group he had put together to pretty much silence and cover up any extraterrestrial activity on the planet, or any relationships we had with them, or any of the discoveries that we have made or research that we've created, and the Area 51 and all the other cool stuff that came out of all this. And so the real story that started to come to light just recently, because everybody was seeing these drones flying all over New Jersey and other parts of the U.S. and actually in other parts of the world, whether this was created to UFOs or was a staged event with our own military or whatever is involved. But there was supposed to be some disclosure about all this. And Stephen Greer claimed in an interview that he's about to release, or some group is about to release a story about what's really happening. And he's claimed a couple of weeks ago to come out before the election. Not the election, the inauguration that's coming up Monday. So obviously we haven't heard it yet unless we hear something over the weekend. But I guess the disclosure would be that this group, the secret group, would come out and say, look, we've been around for decades. We've got technology that already goes to the moon and Mars and everywhere else. And we have created craft, and we're flying craft that could do things that you see. As he says himself in his own interview, if you see it on Star Trek, we already have it, is apparently his statement. So what you see on the Star Trek movie, apparently we already have that technology, according to Stephen Greer and some of the stories that I've heard over the decades. And this came from re-engineering alien craft and all kinds of stuff. So there's supposed to be this disclosure. This group was supposed to come out that said, this is enough. We're not going to do this anymore. We're not going to keep it secret. And it's supposed to be a bombshell disclosure, and it hasn't happened yet. And we've been hoping for this type of stuff for a long time. So it was maybe a false hope, Jim, that suddenly what Stephen Greer is talking about is going to actually happen in the short term. But it's just amazing to me that if it did happen, what would that really mean? Because the stuff that we're told about that exists would, in effect, relegate everything we have now in technology to the Stone Age in terms of the relative importance of its announcement. In other words, if you got stuff that's flying the speed of light, or stuff that's anti-gravity, and you got all this stuff in existence being used and developed, it would be the greatest boon to civilization ever. It would just jumpstart our civilization 1,000 years into the future, or 100 years, or some amount into the future in terms of our existence. And assuming that's even true, how would that affect the markets, our life, our economy, everything else? I mean, it would just change everything. And doesn't mean we would have access to it right away, but it really would change everything for the better ultimately if we had access to the super science technology that apparently exists. So check it out. Watch the interviews for Stephen Greer. Let's see if any announcements come out. I'm not holding my breath. I've been holding my breath for decades, hoping we would see some type of breakthrough in this area. Haven't seen it yet, but it's out there. It does exist. We do have sort of a secret government. It's called the Secret Space Program. It's been in existence for the longest time, and I've been saying this to my friends and others publicly as well as privately. We've already been to Mars. We've already been to the moon. We've got bases both on Mars and the moon. We're doing stuff throughout the galaxy, and we're doing it because we have this advanced technology, but it's been kept totally secret. Totally secret. Why? Because there's power in that secrecy. And if you can control that type of power, why would you let everybody have access to it? And I think that's been what's kept it going for all this time. So we'll find out. I just can't believe they're really going to release it. I mean, that there's so much power and change that would occur if this was actually all came out, and a lot of heads would roll too. So we'll find out. Hopefully we'll live to see it, and hopefully it happens in a short time frame, as Stephen Greer is talking about.
What are your thoughts on the good, bad, and ugly in President Trump's future and ours?
I think there's a lot to talk about on that. We have a whole article in our newsletter. Anyone who subscribes to it can read it. It's a whole section on the good, bad, and the ugly interpretation of what is coming or could come in the Trump administration. So it's a real long article, and rather than get into it in this interview, we could spend a whole hour just going over all these points. Just please get to my newsletter and read it, and you'll see that full detail. And again, it's opinion, but of what we think the good, bad, ugly could be forthcoming.
Mark, can you tell us again about your special offer for our listeners?
Yes, Jim, allowed to. It's 50% off any of our newsletters going to vrtrader.com. and using the promo code 2022 half off.
Mark, thank you so much for being on This Week in Money.
My pleasure. It's a lot of fun. Hopefully the listeners enjoyed it, and don't think that I'm totally left field on everything that I've talked about, because I guess partially I am, but that's what I do, and that's what I enjoy writing and talking about. Thank you.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. He was speaking to us from Arizona. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Eric Hadik, and Mark Leibovit. And thank you for listening. If you have any questions for the show or our guests, you can send them to info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen.